All right. Thanks for tuning in, everybody. Hope you're having a good Wednesday. It's 2 p.m. Eastern. We have the broader market very weak. We have the crypto space very weak. We have Luna drama to talk about. I appreciate you all tuning in. All right, so theme from the last video, and if you didn't watch that, it's worth going back and watching it. The video 2 days ago, and I certainly couldn't look at Luna and say we're about to collapse to under $1, but you could tell there was something in the air. And so the theme of last video was prepare for possibilities where we see anomalies, because we do not want an anomaly to blow us up, where if something happens completely unexpected, something happens once every 10 years, whatever it is, we have to protect against that. So the bottom line is using a stop loss on every trade and not being as loosey-goosey and just not putting ourselves in a position where one trade can make things significantly bad for us as far as our capital is concerned. So in the end, Luna ends up blowing up at this point, and there's a lot going around in terms of, now we're getting the things circulating with Citadel and BlackRock are behind the attack, and that may come to be in terms of truth, but in the end, we can clearly say someone exploited a weakness and someone made a bunch of money on the drop, and a bunch of retail lost a ton of money. And that's as simple as we need to break it down to. And as far as where do we go from here, we don't know. But we know that any trade that is taken on Luna has to be done with a stop loss in both directions, because we just saw multiple 100% bounce as well. That was a little bit of shorts covering for sure. But what was it? A 600, 700% bounce straight into a 2-minute 50% pullback. So this is as Wild West as it gets. And there's definitely an aspect of gambling behind it, because technical analysis is a lot less useful on a chart like this. So a lot of people are just staying clear of it, and there's nothing wrong with that. A lot of people are looking to be aggressive on this and try and seize the opportunity. In the end, whatever you do, you have to protect against anomalies. And the example that I gave was it was an ETN from the volatility sector in the stock world couple years ago that broke. It just, the instrument that it was supposed to track, it no longer tracked it and it went to zero. And we have to protect against that possibility. And bottom line, what it all boils down to, this is a game of flashing numbers in cyberspace. And if you treat it like that as a trader, again, if you're looking as an investor, that's a different hat that you're putting on. You're putting on your investor hat, and it's a very, very different approach than what a trader is doing. So just view these as flashing numbers in cyberspace, and things that you never expected could happen can happen, and we have to protect against that. So let's now look at some charts, and we'll talk about this a bit more as we go over the Luna chart, and then we will interact with you all as well. I'll talk a little bit about Coinbase as well. I'm certainly a critic. You know that much if you've been following along. So NASDAQ, weakness. CPI numbers this morning. Big drop. So look at us at resistance. Look at the NASDAQ. The NASDAQ on this drop over the last few weeks has just been giving us such clarity of resistance levels, and the bears are thriving off of those resistance levels. We had this triple top back here, and we had this quadruple top back here. Wrong line, but so we had a quadruple top, we had a triple top, and here we go with another triple top. If we keep setting these levels that bears can see from space and will continuously play off of, we're not going to go anywhere. We're in a pattern right now where we're setting a lower high every single day for the last 5 days. We just have complete bear control is the only way that we can describe what is taking place here. So we just broke to a lower low. We had a 4-hour sideways channel where we were bouncing off support, rejecting from resistance. The bears are keeping complete control. The next time we bounce, if we do not break this resistance, it is just a 4-hour lower high, keeping the bears in complete control. So again, I love playing bounces, but in this current market environment, if the bulls are not proving a thing, if we're not at historical oversold RSI levels, which we are not, then I am not looking to play bounces. I'm looking to play bearish on bounces, and I'm just waiting for those bounces to make new bearish entries. So the NASDAQ is definitely dragging down on the S&P, or I should say on the crypto space. We've got inflation still out there. The reason we dumped on the CPI numbers is expectations for inflation. I might be off by a couple points, but it was 8.1, I believe, expectation, came in at 8.3. And the reason we dumped there is the higher inflation is, the more likely the Fed is going to continue aggressively raising rates. And market bulls do not want to see that happen. And it's what's currently happening. So keeping an eye on inflation. The next FOMC meeting is over a month from now. So we're not going to get any information unless someone comes out and says something aside from the meeting. But bottom line is, again, let's just keep it as simple as possible. The bears are in complete control. The bulls have to prove to us that something is shifting, that the character of this market environment is shifting, and they're just not doing so every single day. So until that changes, nothing's going to change with the trend. So looking at Bitcoin, it's feeling downward pressure as well. We've got a very clear visual guide of 4-hour lower highs and 4-hour EMA 12 resistance. We know as long as 4-hour EMA 12 is resistance, no bounces are going to do anything meaningful as far as Bitcoin is concerned. So right now we got a 4-hour inside bar, we're testing the low, and we are at a very critical long-term support level. Because if this 28.8K level breaks, which is a double bottom with today, and actually I'm going to just call it 28.7 because 28.7 was the low from January 2021. So that level I'm going to default to. It's a triple bottom at the moment. We don't have any confidence it will hold because we're not doing anything on the 4-hour time frame. Pretty much I would need a 4-hour trend change back to the bulls from here at a bare minimum to even consider that this support can hold from here. If that level breaks, where are we looking? We don't have a lot of support in between 27s, or I should say 28s, and the previous all-time high of 20. There's just very little price history there. And we know when there's areas of price history, just like on Blue Sky Breakout, we go up real fast and hard. If we don't have any price levels to be going off of, then we can drop hard. Doesn't mean we're going to drop hard, right from here while we're still in daily oversold conditions. But next time we bounce, look at how much space. This goes the same for the stock market and the broader market. We have tons of space for a daily lower high to be the result of the next bounce. Whether we bounce 5%, 10%, 15%, 20%, whatever that bounce is, we are scouting a daily lower high as the most likely scenario. And there are bears waiting for that bearish entry. Just like the next time the NASDAQ bounces, bears are scouting a daily lower high because we can bounce 5%, 10% almost, 7, 8%, and just be looking for the lower high. So my point is, it's possible that we bounce and hold this support, set a daily lower high, and then drop over. The broader market right now, without a doubt, is dictating what's going on in crypto. Bigger picture. And that's going to remain the case until it doesn't. And that sounds silly to say, but we're observing this correlation. The correlation is very clearly present, and eventually it won't be. But until that's the case, we know that Bitcoin is going to do pretty much exactly what the S&P 500 and NASDAQ are doing. And right now, both of those names don't have any support. And Apple, which was one big important stock, was holding on to this low. Look at the monthly time frame for Apple. It was I've been calling it the lead general bull, and we just broke the monthly support. And now it's starting to roll over and join Team Bear. And today is ugly for the NASDAQ because Apple's down 5%, which when you have a company of that size, that is massive. So I would love to come on here and give some hope for the bulls, and I'd probably have more views and more subscribers if I did. But we're going to take it one day at a time, and we just have to call it like it is. It is complete control for the bears right now. There is no other way to look at it. The only thing that you can say for the bulls is, well, we're holding this 28.7 support for now. That's it. That's all we've got to say as a bull. And I will be watching for the potential that we head towards weekly oversold conditions if we do break that 29 level. What are my plans? When will I be interested in a bounce? If you give me weekly oversold, daily oversold, 12-hour, 4-hour, hourly oversold, I'm going to scale in for a swing bounce play. But I'm in a very picky market environment right now because the bounces that I have been aggressively trading in the cryptocurrency space have had a different backdrop. They've had a backdrop where we weren't tick for tick correlating with the broader market. And if we were, the broader market was strong. And this is the weakest the broader market's been in a while. And so for me, that means pump the brakes trying to play bullish. And again, I would rather miss the bottom and then enter higher once there's bull momentum at my back, as opposed to trying to catch the bottom. So we have a support level, but that's all we're looking at right now. If we change the 4-hour trend and get a daily bounce going, the support level will be more meaningful, but the burden's on the bulls. And what we have to see is the NASDAQ see a big enough daily bounce. I mean, we're really at step one here because we have to see a big old bounce, a higher low, and a higher high. And again, we're just nowhere near that shaping up right now for a daily uptrend. So it would take over a week for a daily uptrend to try and develop from where we stand at the lows at this moment. As far as historical RSI levels for the NASDAQ, before we get to individual altcoins here, we're not daily oversold. I mean, we're not daily oversold. We can absolutely see further downside. The weekly is just getting oversold. And we did bounce from there on the CVID dump. Okay, I'm paying attention. We did bounce from there on the December 2018 dump. All right, I'm paying attention. Those are some historical bounce levels. 2008, we hit oversold and then dropped for 7 more weeks. But I'm paying attention. That's one level that's at a historical bounce level. I'd like for the daily to get oversold as well into the low to mid 20s, but very patient and picky as a bull. I would rather leave money on the table than try and catch a falling knife at this point. So if you are making a support play off of 28.7, that's fine because it's a clear support level and you've got a clear game plan established around that. But I personally am going to be a bit more patient. So the dominance chart, I was surprised a few days ago and commented how, the dominance chart 2 days ago during the stream was showing us that, yes, everything's weak, but Bitcoin is just as weak. And today's candle shows us in a big way, yes, everything's weak and alts are dumping compared to Bitcoin. And this is now watching for the Bitcoin dominance chart to break out from this pattern that I've been highlighting for such a long time and talking about the importance of this pattern. And the table is set for the bears here, where if we see this dominance chart break 4409 and start to head back to some of these previous levels, again, it's the environment where crypto is weak, alts are much weaker, dominance chart breaks out. So we're close to that bull break taking place. It's not happening just yet, but we're keeping a close eye on that 4409 level. Ethereum just broke monthly support, so it has now confirmed a monthly downtrend as well. Again, little head and shoulders like pattern with a left shoulder, head, right shoulder. So we are in a monthly, weekly, daily, 4-hour, and hourly downtrend right now. So again, I know we have a bull bias in this sector because it's more fun when things are going up and we believe in this space and these projects and we want these big returns, but we have to call it like it is. We are in a downtrend on every single time frame right now. And it's going to take a long time to regain trends one at a time. We're going to regain the 4-hour trend. Then it's going to take days and days to regain a daily trend. Then it's going to take weeks to regain a weekly uptrend. Then it's going to take months to regain a monthly uptrend. We've been through this. Well, many of us have been through this before. We've seen it, how it plays out. It takes a long time. It took a year and a half, however long, to establish some baselines to shift momentum. So again, just want to clearly call it like it is. And that means there's opportunity for bears. I don't trade the crypto space bearish because I'm on Coinbase. I really don't like Coinbase. But again, it does have, everybody's talking about Coinbase's earnings. And Coinbase is right now black dirt breakdown, all-time lows, free fall, just as ugly as it gets. And this is one of the few names, I do not trade on fundamentals. This is one of the few names that I wanted to short. I wanted to short this name. I wanted to short PTON on fundamentals and Roku. I did not understand the price levels that we were at on these 3 names back when we were still in euphoria mode in the broader market. Coinbase sucks. They suck. And their stock price is reflecting that. Why am I on Coinbase? Because of the ease of use in terms of being able to transfer back and forth with my bank. FDIC insurance is a big one. So a lot of people are highlighting Coinbase right now and saying, well, look in their most recent filings, there's this disclaimer where if they go bankrupt, that they are going to use your crypto as collateral and then you are a creditor in those bankruptcy filings or proceedings. And the probability they go bankrupt is probably low, but that's a legit concern. So I personally do not hold any crypto on Coinbase unless I'm in a swing trade and then I'm holding it for a few days. Why I like Coinbase is the FDIC insurance, where even if they go bankrupt, up to $250,000 cash is safe. So that's a backdrop. That's a little safety net because I don't trust exchanges. Again, as I said last time, I don't trust banks. I don't trust the government. I don't trust crypto exchanges. I don't trust the stock market. There's a whole bunch of things I don't trust in our financial whatever. And Coinbase is one of them. I don't trust Coinbase, but I have to have that FDIC insurance. And there are other exchanges out there in the US that do have FDIC insurance, but they are very low volume, a lack of liquidity. So I personally would rather just sit all cash and play bounces at this point in time. Someday, some companies are going to swoop in and save the day. Ah, what a good platform. They've got customer service. They've got all the little things we want to see, like knowing what my average cost basis is when I make an entry in multiple positions. Someday it's coming. I am astounded it is not here yet. In 2017, I thought by 2019, easy, we'll have one. And here we are 5 years later. What in the world are you doing? This company is making billions of dollars, being very bad at what they do. Anyways, that's my Coinbase rant. ETH BTC is at a critical point. We bounced off this weekly support. We double topped at weekly resistance. And if we roll over here, our monthly lower high is set. And it's a potential monthly head and shoulders, which we've been watching. So this is a key support test. Why is Ethereum holding on better? You can look at this and say, okay, with the whole Luna fiasco, we know that Luna, they had to sell, 40,000 Bitcoin to try and keep their peg stable on UST. And so that added a lot of downward pressure on Bitcoin. Probably one of the reasons that Bitcoin was dropping as hard as altcoins, which generally is not the case, but that happened 2 days ago. And you could say, well, all that extra downward pressure on Bitcoin caused it to drop faster than Ethereum, which allowed for ETH BTC to hold on stronger. If that changes, then Ethereum is going to catch up to the downside. So again, we got to be real cautious. If I'm an Ethereum bear, I would love to see a monthly lower high set here, and I would want to see a confirmed monthly downtrend for the BTC pairing to match the USD pairing. But it's all about this sideways range that we are still within at this point. So bulls are clinging on to the hope that this support level can hold, because if it does not, monthly lower high is set and the monthly uptrend is then in jeopardy. So Luna, this is what the chart looks like. We know it's been wild to keep an eye on. And we had a massive bounce this morning. It doesn't look like it. It's an hourly bear flag, but 69 cents to 780. 778, so that is an 1100% bounce in 2 hours, or a little bit more than 2 hours. And then, like I said, we dropped 50% in 2 minutes. So it is as high risk, high reward as you can get. I do not suggest trading it unless you are a proven master in terms of your scalp trading abilities and your abilities to stay level-headed and emotionally in control during times of high volatility. But right now, I have no idea how this is going to turn out. Not many people do. We're going to hold anything above 69 cents is an hourly high or low, but we know on every single bounce, as long as UST is depegged and weak and under 1, then we are going to see bears try and jump on every Luna bounce for shorting. And now, again, that does mean shorts do have to cover, which is why Luna did see a bounce of that magnitude. But trying to nail that bottom, it's a bit of a needle in a haystack. Congrats if you did it and didn't fail 6 times beforehand on those attempts. But we can be looking at some there are some little aspects of technical analysis we can be using. We can be looking at stair-step patterns. For example, we had a higher low every single 5-minute candle here, and when that was lost, that was the top. So there is some information to be had, but we can also clearly say the bears are in absolute control still. And even if we do hold 69 cents, we're just going to look for a lower high compared to 778. So I know the draw of 1,000% bounce in a couple hours is alluring for those looking to be aggressive traders. But just know probability-wise, nailing those moves is very difficult. So again, to go back to the theme of the start, just use a stop loss in both directions. Whether you are long, whether you are short, have to use a stop loss because it saves from a whole bunch of pain. Somebody shorted Luna at $2 and was liquidated on this bounce, without a doubt. Just like plenty of bulls have been liquidated as well. So now let's talk about where we're set up. So what is the most likely scenario? Bears are feasting. We know that, look at this chart, or I should look at the list. So 2 days ago, this is what the list looked like. Yesterday, it looked like this, but green. And now today it's back to red. So we had a bounce into 4-hour lower highs, and they resulted in lower lows in our weak altcoins. So what do we look for entries? We want to determine what is the most likely scenario. And we can do so on the 4-hour chart for all, not all, most of these names. Look at Ape. Look at how much space we have for a 4-hour lower high. If I'm confused about price action, find the time frame where you have a confident gauge of what the most likely scenario is. So I look at this chart and I say, well, we could bounce 30% and still just be looking for a 4-hour lower high. The 4-hour EMA 12 has been resistance for a week at this point. So I know that the next time this bounces, there is a high probability trade to be looking for a 4-hour lower high to be the result of the next bounce. AVAX, I can just go down the list. I know the names. When I organize the list here, as far as who's weaker and who's stronger, I know the names that are at the bottom of the list have more space to form a 4-hour lower high next bounce. So again, if I'm looking to play a bounce right now, do I have anything that I can look at that says a bounce is the most probable scenario? I guess we can use hourly levels at this point. We can look for an hourly higher low compared to the low of today, but that's it. That's the only thing we have to go off of on these altcoins right now. So aggressive bulls are looking for hourly higher low entries playing off of the lows of today. Patient bears are waiting for 4-hour lower highs next bounce. And we had those entries yesterday. I'm again not playing bearish. This is me like saying, guys, enter bearish. I never tell people what to do, but if I'm saying something like this, it means enter bearish. So why was I looking at this point in time for a bearish entry? 8:48 a.m. yesterday. And we'll just look at any random coin. Let's go Sol. So 8:48 a.m. yesterday is right here. So why am I looking bear at that point in time? The answer is a number of things. Number one, we know a 4-hour lower high is the most likely scenario. Number two, the percentage size of the bounces that we just saw was massive. All RSI levels cooled off, 20% plus bounce. Number three, and this is the most important aspect for me, I've been watching stock market bears control the morning open days in a row. And at 8:48, I know the stock market open is 42 minutes away. And I'm anticipating at that point in time, the NASDAQ, let's go to QQQ just so it's easier to view. QQQ at that point in time, yesterday morning, was opening after an overnight bounce. And we know bears are going to pounce on that open. Look at the high of Monday, 306. Look at the high of yesterday, 305.76. A beautiful top fish for bears. So the fact that I was anticipating a bearish open and traded that bearish open in the stock market world. So again, I look at this and say, oh man, I missed it on the alt move, but I just got on the stock market. And I am much more prone to be trading stocks if crypto is just doing the same thing. Because again, it's free. I get free trades. If I was trading the same capital in crypto, I'd be paying a lot of money. And yes, you can find ways that you pay less fees, but free is free. And I can find leveraged instruments. I can trade with more capital. There are ways I can easily match the volatility that the cryptocurrency space is currently seeing. The biotech sector and its leveraged ETFs was all over that yesterday. They were moving double-digit percentages in both directions. But back to it, stock market opening, high of yesterday resistance test, the stage was set for 4-hour consolidation. And so that's what we got. So what are we looking for from here? Next bounce, we're scouting a 4-hour lower high. No idea if it's going to align with the stock market open again like it did the previous time, 2 days ago, but we'll have our guides. We'll have our price level guides. We'll have our EMA resistance guides. So I'd be looking at this list and I'd be looking at the weakest names, knowing that they're going to bounce a good bit. The next bounce that we see, again, it's more difficult to pinpoint when that bounce is going to be but the next time we see it, they're going to bounce significantly. But again, in terms of my confidence, am I more confident in getting this bounce or more confident in getting the 4-hour lower high? And for me, as a trader who loves bounces, I'm more confident in the ability to get the lower high than in the bounce. Again, if you force me to trade the bounce, I'm playing this hourly high or low. But then we have an hourly equilibrium potentially shaping up. So names that are holding on stronger, it is still Bitcoin and Ethereum. I can look at XTZ. I mean, everybody dropped to the 4-hour lower low here at this point. So everybody's just keeping those 4-hour downtrends going. And again, I know this is a very bear themed video, but even after we set a 4-hour lower high next bounce, patient bears are just waiting for the daily lower high. Every name on this list, a daily lower high is the most likely scenario next time we bounce. We will bounce. There will be bounces. There's no doubt about that. It's just, can we change trends? So right now, QQQ is bouncing. Not much, but it's the most significant bounce in the last 2 hours. So how is Bitcoin responding to that? It's trying to set its hourly high or low. And again, the NASDAQ is dictating everything about Bitcoin with where we're trading here. So I'm watching for the potential of an hourly equilibrium. I'm viewing this as a high, low, lower high, trying for the higher low. It'll probably continue to tighten up a good bit overnight. If it breaks bull, I'll zoom out and scout a daily lower high on Bitcoin. I'll scout a 4-hour lower high on crushed altcoins. And again, you need to determine, number one, do I want to be looking bull or looking bear? Well, you could also view it, do I want to be aggressive or conservative? Because the only bulls are aggressive bulls, but there at least is a level to play off of on all these names. Maybe not all of them, but most of them. So again, Ape is just an absolute bear, but tons of volatility in both directions. Even this weak bounce, just a lower high, is that a 40% bounce? 35% bounce? Yes, it is. 35% bounce for just an hourly lower high. So there's volatility in both directions. And again, if you are trading well, keep doing what you're doing if you're making money in this market. If you are struggling, stop. Stop trading. Because you're just going to keep giving it back, giving it back, giving it back. It's telling you that this market environment is not favoring your trading style. And so that means take a breather. Stop trading. Stop losing capital. As I said last video, the most important thing about this market cycle, especially if it's your first bear cycle, just survive. So many people that I know traded 2017, 2018 very poorly, giving back tons of gains, and they were ready this time around because they survived. They experienced it, they learned from it, they protected their capital, and then they put their capital to use when the bull market returned. We are in a bear market, and a bull market will return. I don't know if it's going to be in 2 months or 2 years. I have no idea. But it will happen. These are cycles. So preserve your capital. Paper trade and practice. Practice to trade in a bear environment so you're ready the next time around. You shouldn't be anticipating doing well in your first bear market if it is your first bear market. So more experienced traders definitely have a lot of volatility. We got an hourly higher low attempt. We have 4-hour lower highs as the most likely scenario as the result of the next bounce from there. We will then have daily lower highs as a most likely scenario. The only question is, when does the NASDAQ and S&P 500 find a bottom for a daily bounce, knowing that we will just be scouting daily lower highs to be the result of that bounce? Preserve your capital. Paper trade and practice. Get better at trading bearish. And survive. All right, I'm reading the chat room. Appreciate you all tuning in. High numbers. It always happens in fear environment. So again, long-term no-touch. I personally have all the long-term no-touch positions I want. I'm not adding any. If I didn't have any, this is the kind of market fear environment where I'm dollar cost averaging a bit at a time. Absolutely. And again, as far as swing trades, just not trying to nail the bottom because I am not seeing, if the NASDAQ right now were in some fear, historical fear levels, I would be looking to play crypto bounces. But it's not. It's not daily oversold. So I can't be going aggressive if the NASDAQ, which is our driving force, is not in daily oversold conditions. Hex. I never know what exchange to use because the volume is very poor all over, but it is a weekly uptrend. But we're looking for a monthly lower high as the most likely scenario, anything under 374. So it is doing the same thing on the monthly the last few months that Bitcoin did before rolling over. Doesn't mean it will roll over. Obviously, it's holding on a lot better, but just got to be cautious because it's the same monthly bear flag right now. If you look at this monthly retracement size, 382 rejection. So the question now is it going to roll over and break to a lower low, just like Bitcoin did? So yes, it's definitely holding on stronger, but that doesn't mean it's a strong chart. And as long as that monthly is a possible bear flag, right now we are in a monthly downtrend, a weekly uptrend, and a daily downtrend. So it's a bit of a mixed bag. Whereas a ton of other names, monthly, weekly, daily, 4-hour, hourly downtrend. The only way that you can be more bearish than that is being at all-time lows. TRX, definitely holding on better. Any name that's not dropping to the lowest price of the year is holding on better. 4-hour, big old bounce there. Need an hourly higher low to form. We need an hourly uptrend. Big bounce, absolutely, but doesn't mean much if we can't confirm a trend after that bounce takes place. That shows me some shorts definitely got trapped, but can there be sustained buying pressure after those scales tilted very quickly? And as far as the bigger picture is concerned, anything above 577 is a weekly higher low, but just like Hex, the most likely scenario for me is a monthly lower high compared to 12.9, and it is a monthly equilibrium right now. So if we set a lower high and then roll over, obviously it's an equilibrium bear break. So yes, it's holding on better. It's just a question of can it continue to hold on better until Bitcoin finds a bottom. The right column of tickers here, I'm just looking at percent gains on the day. I organize it on the morning, and then I can look at it, and it shows me who's moving around. Because if I have it like this on the morning, and then next thing I know, there's a green name down here, that tells me, okay, this name is significantly outperforming since this morning. But not only that, all the weakest names, I can see these names all at the bottom of this list, these bottom 10, have more space for a 4-hour lower high to form than the names at the top of the list. Like Bitcoin right now doesn't have a whole lot of space for a 4-hour lower high to form. It can still form, but it's only, 6% away? Where some of these coins, it's 30, 40% away. So it's a very big difference. I don't do anything special to set my RSI indicators, just your standard 14-period RSI. Where's LTC? LTC BTC is likely breaking down. Yep. Black Dirt breakdown, or maybe not, but many, many year lows. Absolute lead bear. Look at the weekly. Every single bounce is a weekly lower high with weekly EMA 12 resistance. I mean, if I'm looking for a bear, that is doing exactly what I want it to do. It's very orderly and clear. And as long as we keep setting weekly lower highs on LTC, BTC, it will remain a lead bear. I do close on the RSI, although sometimes I'll check and see where's the lowest level it hit, but I keep it on close. XMR USDT is testing its low, 132. If that level breaks, the monthly downtrend the monthly downtrend confirms. It's a monthly equilibrium on the verge of breaking bear. 132.10 must hold. And we won't have confidence that that monthly support can hold unless we confirm a daily uptrend from here. And then we'll say, okay, that's a solid support hold. if we gain a daily uptrend. But right now, we're just hovering right above that level in weakness. Thanks, William. Appreciate the support. I don't use Bollinger Bands. I used to in my first maybe 7 years of trading. Honestly, the crypto space in 2017, I took them off the chart. Just pure price action. And then I carried that back over into the stock world after that crypto session of 2 years or however long it was, and just no longer use them. I became more of a larger capital, scalp trader, price actions, everything. EMAs 26 and 12 definitely a factor as well, but ditched the Bollinger Bands. Some altcoins won't survive this bear market, just like others. I mean, when's the last time I heard someone talk about NEO? Remember NEO used to be a thing? So we are definitely going to see a lot of altcoins. However, the more prolonged the bear market, the more altcoins are going to disappear, and maybe not entirely disappear, but just completely leave relevancy. Not doing anything to my long-term no touch. They're from 2018s, and just not touching them. I'll ride them to zero. Well, I'll ride them to the promised land. Talk about it in a decade. That's decade mindset. And we're only on year 4. Got 6 more years before I'll even consider doing anything. Stock bounce right now, just looking for a 15-minute lower high on QQQ. I'm looking to short the energy sector. Looking for an hourly lower high top fish versus the high of today. I'm looking for the energy sector to potentially set a daily lower high, just to see if it's going. We used to see rotation for bull sectors. This name would run, and then it would consolidate, and then this sector would run. And now we're seeing it the opposite. We're seeing this sector dump, and then money leave this sector. Energy has been holding on real well, and I know oil and natural gas are still strong, but I'm looking for that shift to take place. And so I look at this monthly chart. In a sea of monthly charts that have been decimated over the last few months, we're due for some consolidation. Any thoughts on where to start a long-term no-touch position? Now. Make a first entry now. Establish a game plan. If I've got $10,000, $5,000 to put into long-term no-touch, break it down into 5 different positions. Buy one now. Buy one next month. Buy one in 2 months. Break it down and spread it out. But this is definitely enough fear to establish a starter for sure. $12 and 26 EMA, I find they work well on everything. I use 2-minute, 5-minute, 15-minute, hourly the most. Daily and weekly, of course. Not adding to longs at all. I've got all that I want and need. It is a sizable enough portion of my net worth. I like where it's at. I like where my real estate portion is at. I like where my crypto portion is at. Whole bunch of cash these days. I'm always a ton of cash as a trader, wanting to be really agile and bouncing around. I will trade bounces in the crypto space. It's just I'm just not there yet, and I might miss it. I might miss the bounces in the bottom, but again, I'm in conservative mode. I'm not in aggressive mode, and the broader market has me on pause. It's just not daily oversold. QQQ. It's not daily oversold. I can't be aggressive. How can you become a better trader? You got to put in thousands of hours of work. You start with our Intro to Technical Analysis free course on YouTube. You go through our 10,000 YouTube videos, or at least a bunch of them. You practice, and you put in the time and effort. And again, just be aware that, in this stream, I'm all bear based on price action and trends. This will be the sentiment at the bottom. I'm not saying this is the bottom, but I'm saying when the bottom is hit, wherever that is, this is what the sentiment will be. Everything that you're seeing. It's not like everybody's going to say, okay, here it is. Here's the bottom. It's going to be this. So again, we're just aware of that fact. So how will we know? We will wait for some trend changes to prove it. Or maybe the Fed comes in and shifts some policy, backs off rate hikes, and we see some capital flow back into markets. Who knows? Certainly not going to try and predict the macro. Just one day at a time, knowing the bulls have to prove to us that we are finding a bottom, and they're not doing anything at this point in time to do so. All right, I'm going to wrap it up. I'm a Gemini. Cardano, without even looking, I know it's all bears. Energy sector ETF, I'm not sure. For leverage versions, I was just going to short XLE. In fact, I probably need to get on that. It's going to be a swing position for me, so a bit smaller size, but going to grab a starter. If we break the high of today, I will probably go back to cash and reassess. Gold miners are definitely correlated to the broader market right now. So again, just use the hourly trends. I mean, we just have a clear hourly downtrend. High of today, rejected from the high of yesterday by less than 10 cents. We're holding the low of yesterday, so it's a tightening range attempting to shape up. So I can say it's holding on better than the NASDAQ right now. The trends are your friends. And yes, there are plenty of times I play counter trend for bounces. But again, this is just a different enough market environment for me. The other times where I've stepped in front of the speeding bear train to play bounces, we were in free fall. December 2018. Free fall. This is not free fall. This is a more controlled grind down. Granted, it's picking up speed a bit the last 6 weeks, but it's not the same as the previous drops we've seen in the last few years. It's enough to make me pause. That's pretty much what it boils down to. All right, I'm out of here. I appreciate you all tuning in. We'll keep checking in as always. We're not going anywhere. We've been through the bear markets. We've been through the 85% pullback. The good times and the bad. Keep an eye on the dollar. Keep an eye on the 10-year. I mean, again, the daily market videos that we put out are now more applicable to the crypto space. I don't talk about crypto in them, but they are more applicable to the crypto space than they have ever been before. So they are worth watching. All right. Appreciate you all. Do good things. Thanks for the likes and the shares and all that stuff. See you soon.